What's going on, everybody? Today is Saturday, February 21st, 2026. We are glad to be back. My name is ElBozo, and this is your series, Invest Your Ways to Financial Freedom. We want to start today by saying happy um, everybody. I hope you guys are having a good weekend, and we are about to start our second video of Invest Your Way to Financial Freedom, our series in which we want to share with people how they can strategize and create a framework where everybody can use it and they can strategize and build their financial journey. And if you're serious about investing, start here. There is no hype, no trend. It's all about the fundamentals and way to execute so you can prosper financially. Remember, our mission is to simplify the financial business world and make it more accessible for everybody. And as usual, if you just join us, we want to share with you that our series, we start usually by talking about the market, what's going on in the stock market or the business world in general, the biggest news for the week. And also, we give you our perspective for the next following week, what we expect. And also, we give you a bonus tips on what stock we think that's in our portfolio, what stocks are doing well this week. So you can get a look at them. Obviously, we cannot tell you to buy, but those are the stock to keep eyes on. Okay. All right. So today we want to start by telling you our main topic today will be after, the first steps to take before investing. We're going to talk also about income versus asset. Uh, and at the end, we also want to focus on why business income is better than your regular job, which is usually reported on a W-2. And to start the day, now let's talk about we're gonna go straight into it. Market news this week. As we see this week, there was a lot of volatility in the market, and one of the biggest news that came in was the fact that the market itself, the tariff from Donald Trump tariff agenda was blocked by the Supreme Court. So that means they find out that they decided that his a tariff was definitely not legal. So he overreached his power as president, which is a blow for the president. So those tariff cannot be implemented the way he wanted. So that's mean he he gonna be the government gonna own almost like 170 billion dollars illegally collected in tariff. So that's gonna make it more complicated for the government when it comes. Not only he cannot implement the tariff agenda, but also he's gonna own billions of dollars to the companies that he already take the tariff from. So that will make him uh, not, he's gonna have to figure out how to repay those people. So that's why we see in the market, it's big news yesterday, and also investors kind of like those news because they kind of go above. You see the market reaction. The market reaction was the fact that most of the market become a turn end in a bigger they end upside. So that's mean market react positively to that news. And in the midst of those problem for next week, we can say that we're not sure how the market gonna react. Sometime the market react. There's gonna be we expecting for next week a lot of volatility. Trump already announced different ways he's trying to um, put more tariff, use different technique to put more tariff certain other way. So we expect a lot of volatility in the market for next week. And also we can say that for next week, we got NVIDIA report on Wednesday, 25th of February. That's a big one that investor, if you're really into investing, you really want to make sure you are looking at NVIDIA report because this is the biggest company, like AI company that's Nvidia is the company that's manage that's promote all the AI. So if you are buying AI stock, you know that Nvidia report on Wednesday is a big one to look out for. So for next week, again, a lot of volatility in the market for next week. We are definitely paying attention to that. And to close that section, we want to look at the twist stock for this week in our portfolio that we're doing well, which is we have Syndic, ticker SNDK. We had Google Alphabet stock and Apply Material. Those three stock were the best stock for us in our portfolio for this week. Again, stock to pay attention for next week. Um, Now, if you just join us, again, we're on the second video of our series, Invest Your Way to Financial Freedom. We believe that everybody got a chance to invest, and we're trying to create a community where we make it very accessible for everybody, the financial world. We simplify the financial world, make it more accessible for everyone. And tonight, let's go straight into the first topic of our investing journey. Today, we want to talk about the first thing you need to do before you invest. Especially, you need to, why is it important to understand your journey and why you need 6 month expensive save and the real difference between income and asset. And lastly, we want to explain why business income a your W2 in the long term. So I can say before you start investing any single dollar in the stock market, crypto, real estate, or any type of business, there is one step that most people really ignore and they try to skip it. And that's why a lot of people get panicking because they haven't done the first step. The initial step for me, it will be knowing where you are in your financial journey. Um, Most people invest blindly, but they just copy someone in the social media or they just try to show off, blowing up money. Perhaps, you probably just starting in your journey. You probably a college student who don't have a lot of money. Perhaps you already have a business that's running and you're just starting your business journey. It doesn't really matter where you are in the journey, but you need to be understand where you are in your journey. For example, in our uh, investing framework, we classify three phases of this journey. The first phase of this journey will be the initial phase, of analyzing where you are in the journey. That's when you start like doing investment, doing like your analysis about your investment. You got to know what your bills are like, what are your debt, what are your income is. Gather those information will be the initial things that you will be doing. And the second phase, you might be already in having a business, so you already established, so the business is not really doing well. So that's mean you might have to go back and do some more work to make sure you get there where you need to be. And the last phase of our framework will be when you now you're already successful. Maybe you're successful already, maybe you already have a lot of income, you're doing all the investment. Now in that phase, what you're trying to do is, if you're in that phase, you're trying to save money, keep your income, grow, protect your income, and that's very important. As you can see, no matter where you are in the journey, the most important, you start to identify exactly what phase you are in that journey. And once you know what phase you are in the journey, it's very important to go back to make sure that at least you have 6 months of life expenses saved. The reason I'm saying that is because having some saving created a peace of mind in case something happened. Maybe, in case something happened, you already have a plan. Investing is not stressful for you at that point because you already have 6 months of expenses saved. Like, let's say if your car break down, you lose your job, or medical bill happen, something, you have already have a saving. If you don't have that 6 months save, now you already start investing. Maybe you have to sell things, you might have to sell your stocks or your investment because you were not prepared for those extra circumstances. And that's why then you're gonna end up selling when you're not supposed to sell. I see investors selling their houses because they get, somebody gets sick. So that means, let's say you were not prepared. So if you have already 6 months save expensive, now you just can take your time, so at the end we can say this is not a money for investing. The 6 month expensive save, it's not flexing. It's your financial seatbelt when financial accident happen. No matter what you do, you cannot predict what financial market is doing to go down or fire, but you can just like make sure you have that cushion you can fall on in case something happen. So now to build that 6 months of expenses to save it, you might have to take some other job. You might have to figure out a plan how to make more money or just spend less so you can create more money for your saving. If you already have a saving plan, you can just let me know what was about. Is it like was difficult to keep that saving up? What did you do to increase your income? About that, definitely will appreciate it in the comment. So now, first we say before you invest, let's recap. Before you invest, you make sure you know where you are in your financial journey. Are you in phase one where you are just starting to analyze your finances, or you're in phase two, which is you already have business but you're not sure how to do it. Now you are like really strategizing to improve your income. And phase three, which is where you already established, you got everything going. Now you got to strategize to protect your finance. So then after you know where you are, then you start like making sure that you save 6 months of your finance. So that's mean you already ahead of the game. And now, so if you can do those two things, I think you will really ready to start investing. But today we were not gonna go deeper in the investing framework yet, but we want to go back to explain something is very important, which is the difference between income and asset. We're gonna next week we're gonna talk more about income, the different type of income. But today we want to just go briefly about what is the difference between income and asset. Income is money that you earn. Asset, that's thing that take your money without you. That's thing that's work for you without you working or punching. So it's like automatically generating money. You can be sleeping, your asset is working for you. So for instance, a paycheck is income, and rental properties or a business dividend, those are assets. The main difference is that those assets are not capped. You are not limited a certain amount like you limited in your income for your job. Your asset can go exponentially. But the only problem is most people only focus on increasing their income, but never build asset. That's why a lot of people who have money, what we call high net worth individual (HNI), they still remain broke because they don't understand the difference between asset and income. They were focused on getting more income, but they don't build asset. So in order for you to grow and be more secure in your life, you got to focus on asset. That's why here today we want to make sure you understand the difference between asset and your income, especially coming from your W2. Now let's talk about, since we're talking about your income and asset, now let's do a quick comparison between your W income and business income. For example, myself as a nurse, this is my W2 income, but I know that this is like very cap. It's time. For example, every month you got a certain hours. Let's say every week you have a certain hours that you work every week. And it's okay, but it's time limited. So you cannot work certain hours. For example, here in the US, you cannot work more than 40 hours. If you do, some people might, there's so many hours in the week you can work, but it's also difficult to your body don't allow you to work certain hours. Even though you're doing overtime, your body doesn't really can handle certain hours. If you're working 90 hours a week, you can't work 90 hours a week. So your W2 income is limited to time based. The problem is also is like, what about if you get sick, if you get laid off or fired, you don't get paid, and that's really a big problem. If you look at the income itself from your work, it's time based, and that can cause a lot of problem. If you don't clock in, my friend, you don't get paid. And also another problem with a W2 income, it's tax fixed first. You pay the tax first. For example, before you get your check, they already take your tax, in case you have a W2, which is most commonly what people have, especially in the United States. Your work, you already paid the tax. So the money that get in your hand is already the whole tax already taken out from it. And also it's capped by hour, and it's a salary. So no matter what you do, there is so many things you can do to increase your income if it's based on a W2. I think, but if we compare it to, for example, a business income, which is when you own, in terms of ownership for a business, when you own, your business is scalable. For example, you can go exponentially. So there is no limit on how much money you can make if you really understand business and if your business is growing. So that's very important, because you're not capped compared to if you have a W2. And also tax advantage of earning from a business perspective. uh, the big difference compared to a W2 income, many tax advantage with the business income is the fact that you don't pay taxes first. You pay taxes after you control your expenses, after you do all your deduction, then that's when you pay the tax. So that's a very, very big difference. And I think that's one thing like a lot of people don't really understand. Like, if you have a business, as a business person, you have to deduct your taxes after all your expenses being paid and all you got all the deduction. So that's how a lot of people keep their income straight, because they understand, as a W2 employee, they pay the tax first. But you, as a business owner who creating a business like an asset, you pay the tax after your you already claim your expenses and also your deduction on your taxes. And to finish, you can convert your business into an asset. You don't have to be there to You can put your business working for you. You can hire people. You don't have to even be there in the business. So it gives you that sense of financial freedom, because you can close shop whenever you want. And that's an adjunct to that's something, a bonus from having a business that really well is working very well. That's why rich people don't focus on income. They not focus on that. They focus on ownership. With ownership, you have not only a chance to generate exponential revenue, but you get the freedom that you deserve. I can tell you, your W2 can found your future, but it rarely created. But real wealth is based on asset creation. That's why we focus in on our investment framework to focus on generating asset, not income. So just to recap for tonight, we went to the phases to know before you invest into any type of doing any type of investment. We share with you today that you need to know your financial where you are in your financial stage. Make sure you save 6 months of expenses, understand income and asset, and how to use your income to buy asset. Shift your focus on earning to owning. Investing is not about being fast, it's about being prepared. So that was for us today that we want to share with you today. And for next week, we are looking for we're gonna go deeper into our investment framework. We will talk about the different type of income really in depth. What are the different type of income and ways you can increase your income? Definitely next Saturday, 8 p.m. Central Time. This is like, put it in your calendar if you really want to know more about the investment topic that we have for you guys for this series, Invest Your Way to Financial Freedom. And I will see you sometime next week, next Saturday at 8 p.m. Central Time. That is our series. We'll see you next time. Thank you.